This is Satya Pradyuman of Cirrus Research. The latest quarterly is just out. The subtitle, Geopolitical Risk and AI to Accelerate Broadening Markets. What's critical in this report is there are really 2 points. One, the broadening effects we're seeing, whether it's emerging markets or U.S. smaller cap stocks, or for that matter, value outperforming growth. These elements are likely to accelerate. This is not just driven, though, by AI. In fact, the case we make is that geopolitical risk in the last 18 months or so have really spawned this broadening, global broadening effect. And what we think happens here as we go into the back half of the year is this is likely to accelerate. Let me walk you through a few key points from the full quarterly. Number one, to our really surprise, the AI theme has really been dominant across markets, and yet, notably so in the large cap indices, the U.S. large cap value benchmark is significantly outperforming large cap growth. This makes no sense given how dominant the AI trade is. In fact, when we look into the smaller cap, that's the right panel, not only are the small cap averages outperforming, but the value growth spread is a lot closer, I should say. At the heart of this is this idea that what we think is going on is investors are indeed chasing the AI trade, but what they're also doing, because valuations are extreme, they're hedging that AI trade with rest of markets. And I think that is what we'll see and what will likely accelerate as we go into this year. Let me walk you through a few key pointers. Number one, the valuation gap with large cap growth or large cap value is severe. It's about 3 standard deviations above normal. The last time we saw this was in the 99 internet period. At the heart of this, what we're not seeing is the similar extreme in the smaller cap arena. And I think this accounts for why the growth value spread between large growth, large value is so meaningful relative to the spread that's much narrower in small cap. Bottom line, the real extreme seen in this AI trade has really been carried on in the last 2-3 years in the large mega cap space. And we think that's what's forcing investors to add protection. Part 2, there's a fundamental rift also forming with classic AI players of the Mag 7 age, which you'll notice in this scatter plot. In scatter plots, there's a lot going on, but at the heart of it is the forward estimates for the non-Mag 7 names are by far greater when you look at forecasts from this year to next year. And I think this is crucial to understanding fundamentally why we'll see this AI theme continue to broaden and go further downstream. The second point is, at the heart of this current backdrop is speculation has begun to reaccelerate. And this is something that is likely to force this sort of valuation sensitivity well beyond where we're at right now. In other words, speculation is rising, but it's not extreme. If these readings begin to cross over the unusual levels, typically what we'll see is leadership starts to break, valuation factors start to do better. Stay tuned. This is getting awfully close. And then this idea that all of the outperformance in the smaller cap arena, or for that matter, emerging markets and so on, it's all tech. Guess what? Most of these sectors, when we compare them large to small, a number of them that have nothing to do with AI. Granted, industrials are effectively an AI play. So I wouldn't stack the deck there, but energy, financials, utilities, real estate. What's going on? What is happening is that CIOs, portfolio managers recognize the extremes they're in the large cap arena. What they're doing is hedging their bets and they're looking at everything else. So what this means is that it does have a tougher bearing for active small cap managers. The idea that somebody else with a lot more money is coming into buying your stocks, it's going to make your benchmark tougher to beat. If we're right, what we want to do on the growth front, focus more on the GARP models that we run. We think adding a layer of valuation here as we look out still gets us the AI play, but it also gets us business growth coming from every other sector. And on the value front, this sort of leaning away from quality, it's not that we want low quality, but what we want to do is emphasize the valuation focus in this next 6-12 month era. Take a look at the full report, and as always, happy to take your questions. Thank you.